Welcome back. I'm Pratap here. Today is 7th February 2024. In this video, let us evaluate the performance of the high liquidity zones generated in our yesterday's report. Even before that, a small announcement, please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos are available in a playlist supply demand zone price action course at our YouTube channel. I have provided the link to this playlist in this YouTube video description. If you click on the link, you will get into this page and scroll down, and all the training lessons starting from lesson 1.1, all the lessons are available in an order. Even the upcoming lessons also will be placed in this playlist. Please go through all these training lessons one by one and strengthen your skills. I have also provided the link to our Telegram channel in this YouTube video description, and please join at our Telegram channel so that every time before we release our video, we will be providing an update in our channel so that it will be useful to you. Now let us get into our analysis discussion. Yesterday we identified 6 high liquidity zones. Yesterday we did not find any high liquidity zones on daily time frame. Only in 75 minutes time frame, that too the supply zones we identified. All these 6 high liquidity zones are 75 minute supply zones. The first one is Astral. We got an entry in this zone. So let's get into 75 minutes time frame. So this is a drop, base, drop, this supply zone. And this 75 minute supply zone we fine tuned with 15 minutes time frame. In 15 minutes, we have identified 2 zones. This is the first 15 minute zone. This is a rally, 2 base candles and a drop. And the second one is another, this is a drop, base, drop. These 2 zones are available. And in this 75 minute zone is already tested. So that is the reason why we didn't plan any trade in this zone. The 5 minute zone is tested. Let me show you the 5 minutes time frame. So here we have a 5 minute zone. This is a drop, 1, 2, 3, 4, 5 base candles and again a drop. And this zone is already tested, this 5 minute zone. So that's why we planned a trade on the fresh 5 minute zone. Here inside this 15 minute zone, we have identified a rally, base candles and a drop candle. Just I want to show you why we did not plan in this zone, because it is already tested. Because always we look for fresh 5 minute zones, or the 5 minute zone should be a high liquidity zone. Even though it is tested, we can plan. And this is already tested, so I'm deleting this. So this is the one where we plan. We have a fresh zone. And today prices entered into the zone, and after that it reached the 15 minutes target. Let me show you the 15 minutes time frame. So here we have a drop, base 3 base candles and a rally. So in this 15 minutes zone is our target, this demand zone. So today prices entered into this zone. If I show you the 1 minute candle, you will understand when exactly we got the trade. So between 9 o'clock 19 minutes and 9 o'clock 25 minutes, we got trade in this zone. And after that, it reached the target at 11 o'clock 31 minutes. And this is the way Astral has given a profit 7,578 rupees. And it is a 5.9% return on the investment as per one futures lot cost. So it is close to our average ROI, 6.1, just very close. Let us look into the next stock. Next one is Nifty. See, Nifty is having a 75 minute zone. started in the year April 2022. We have a drop, four base candles, and again a drop candle with the hidden body. And we didn't plan a trade in this zone. The reason is we couldn't fine tune the zone at a 5 minutes level because we don't know the structure. So that's why Nifty we didn't plan any trade. But even then, the price did not enter into this zone today. So this is about Nifty. Sorry, Infi. It's my bad. Sorry, it is Infi. It's not Nifty. It is Infi. And next one is Laurus Lab. This is the zone, 75-minute zone. We have a rally, 3 base candles and a drop. Today prices entered into the zone, but it did not reach the fine-tuned area. How we fine-tuned? The 75 minutes, we changed the time frame to 15 minutes. In the 15 minutes, we identified a zone. We have a rally, 1, 2, 3, 4, 5, 6 base candles and a drop candle. And within this again, you should look for 5 minutes. If the structure is good, we can plan a trade. Otherwise, it will be violated. But I identified a 5-minute zone inside, almost near to the distal line of the 75 minutes. We have a rally, we have a base candle, and we have a drop candle with a small gap. So gap down. So maybe this is a pro gap. So definitely strong order flow will be there in this zone. We can plan a trade even because the risk is very small. Even at this pro gap level itself, you can plan. That means you can draw a zone like this and we can plan. And before that, there were some rejections also just before this pro gap. After that, prices came down. But today, prices did not enter into this zone. That's why we didn't get a trade. And the next one is Tata Chemicals. Tata Chemicals 75-minute zone, I didn't plan any trade. The reason is, this is a leg-in base and a drop candle. Why I didn't plan this trade in this zone is, there is no 15 minutes zone inside this. Let me show you. Let us move to 15 minutes time frame. If you look inside, there is no 15 minutes zone. See, there is no zone at all. There is no supply zone at all here. But there were some rejections in this zone. Maybe these rejections, maybe there could be some order flow here, maybe at 1 minute level or something. But we cannot take a risk. Already 2 times prices entered and more deep inside. But anyway, we didn't find a proper structure. If proper price structure is there, mostly it will be deleted. Maybe the reason why it worked earlier is institutions created a zone like this. Maybe that could be the reason. From there, the order flow, there is a pending orders in this zone. That's why previously prices came. After that, there is no zone inside. So that is the reason why we cannot plan a trade inside this zone. And the next one is Tata Power. Very interesting. Today it stopped out 2 times and third attempt it gave the success. First let me show you the zone. It is a 75-minute zone. We have a rally candle, 3 base candles and a drop as a leg out, then follow through candles. This is the entire 75-minute zone. Inside we identified several 15-minute zones. Again inside 15, again several 5-minute zones. See, this is the first 15-minute zone. We have a drop, base, drop. We have another one, a drop, 1, 2, 3 base candles drop. And here again we have a rally candle, base candle, again a drop candle. Just at the distal line there is a 5-minute zone. Okay, that I will show you in the 5 minutes. So basically we identified 3 75-minute zones. This is the first one, this is the second one, and this is the third one. Maybe including the 5 minutes we can say this is the third one. And today what happened? First of all, what is our trade plan? That is what we have to discuss. What happened after that, that is a different. That's why I'm hiding today's data. See how we plan the trade on 5 minutes time frame. So before today's price, first of all, how I fine tuned here, drop, base, drop, one zone identified. Here again a rally, base, drop, another 5-minute zone, two zones I have drawn. And here again we have a rally, 1, 2, 3, 4 base candles, again a drop candle, rally, base, drop. This is a 5-minute zone. And then we have just overlapped, maybe a narrow range, narrow gap is there, but it is, we can say this 5 minutes rally, base, drop. This is overlapped with this 75 minutes. We can say this 5 minutes is associated with this 75 minutes. Exactly within this 75 minutes, we didn't identify a zone. And this is the actual one. Okay, look into the first one, the bottommost one. We have a drop, base, drop. It is already tested. Prices went more deep inside. So that's why we cannot plan a trade. This will be easily violated. But look into the one above, that is a fresh zone, rally, base, drop. Because it is a fresh zone, we can plan a trade here. In case, if this is violated, then what is that? You have to exit from this. You have to, because if it hit your stop loss, you have to exit. And the next time when prices enter into the next zone, definitely there are higher chances to get. Why higher chances? Because this particular 5-minute zone would have consumed some of the supply, not supply, demand. This supply zone would have been consumed some of the demand, and remaining demand would have been weakened by the time prices enter into this zone. And moreover, this zone, see the rejections before the zone. Maybe they are not the great rejections. Lot of time it prices hold in this zone, but okay, we can consider after that there is a big move towards the down. But not very, actually the rejection should be very strong from this zone. But such kind of strongness I have not seen. But still this is holded the prices. That is the reason why there are higher chances this zone should be successful. Suppose if due to any reason, if this is not successful, then the last hope is the topmost one. And moreover, this is the origin. Origin means from where the actual downfall is started. Probably more pending orders will be there in this area because this is the starting place. And see, moreover, next time previously prices entered near to the zone, see the sharp fall from this zone. It didn't hold for a long time. See, immediately the prices came down near to this zone. That means there is a very strong order flow in this zone. Maybe here also strong, but the prices tried several times. Maybe the demand is more here. That could be one reason, but it holded the prices. At the time, some of the supply might have been consumed, but here that is not the case. The moment it entered, see, after that how prices came down. All these are all 15 minutes, 5 minutes candles. They came down, came down, came down. But that is not the case. That is the difference. That means in this area, the order flow is much stronger than this area. Here also there is a strong order flow because prices couldn't able to enter inside the zone. So that means we have three trading opportunities. This is the first one, this is the second one, and this is the third one. All these are all fresh zones. But today what happened? This zone is easily violated. This zone is easily violated. That way we got a loss 1350 rupees, which is 0.5% negative ROI. We got a negative ROI of minus 0.5%. Why only minus 0.5%? Because the lot cost is, futures cost is around 2,70,000 rupees. Because the margin cost is, our investment is huge, so that's why the number loss looks like it is 1,350, but ROI is only 0.5. What is the maximum loss we can bear for your investment? Up to 2% as per the risk management. Okay, anyway, this zone is violated. Maybe all the pending orders are easily consumed, and by the time the prices enter into this zone, see here, this demand is weakened. See the rejection from here. After that, see how prices came. But unfortunately, what happened? The prices did not reach our target. The reason is institutions created a new demand zone afresh. They decided to break this zone. That's why they created a new zone. And with that, they pushed the prices. And this second supply zone is also violated. The one initially we took the trade, it looks like this is working and reaching our target. Unfortunately, after some time, institutions again increased the demand and they violated. That way, second supply zone is also violated, and we got 3,712 rupees loss. You may feel it is a very big amount, but if you look into the ROI, it is 1.4% only. Minus 1.4%, the ROI, the negative ROI we got, loss. Even though the loss is 3,700 rupees, still ROI is minus 1.4, maximum 2% we can accept. See, those who can't bear this much loss, people would have taken a little deep inside, they would have taken an order. There is no rule that exactly at type 2 proximal you have to take. Between type 3 proximal and type 2 proximal, somewhere you can draw a line, and if prices enters, you can take a trade. That is also possible. There is no rule that nobody can stop you. It's all about a risk reward game. But the only thing is, there are higher chances, if you are going deep inside and take the trade, there are higher chances to miss the trade. But anyway, here prices are entered more deep inside. But anyway, we have to accept this is at least the maximum loss what you can expect is 3,712. That is what I am drawing. I'm recording the values. Okay, now after that what happened? Prices entered into the real origin. The origin where this entire move has started. And here definitely more pending orders will be there. And one more point you have to observe, and this demand is already, this supply is might have consumed a lot of demand next time when it is reaching. And finally see prices entered and how it pushed the prices down all the way to the target on 15 minutes. This is the 15 minutes target. Let me show you. So drop base rally with hidden body. And finally reached the target. So you can say there is one more, we can draw a new demand zone. During the live market it happened. So why can't we book a profit here? Yes, we can book a profit here, it's here also. But if you trailing stop loss, definitely you would have booked ever. That's why I'm showing you 5 minutes zones. Look into the 5 minutes. Near to this target, there is a 5 minutes, not violated. There is one more 5 minute zone at the target, that is also not violated. And finally reached your second target. This is our second target. Actually, this is our initial target, but during the market, the new target is created. But anyway, this is our actual target. Whether it will reach or not, you can test using your trailing stop loss. And this way, Tata Power has given 27,337 rupees. 27,337. And which is 10.1% return on the investment as per one futures margin cost. That means whatever the loss you got today, the 3,712 and 1,350, if you deduct from this profit, still you would have got 22,250 rupees, something around 22,000 plus profit you would have got. 22,000 profit. Still you would have got around 8% ROI. Still 8% ROI after deducting the losses. So that is, see why I said this is important. Sometimes what we do, if your first zone is violated, you will run away from the market. Your emotions comes into your mind. I got the loss, I lost some money. Forget about it. These are all the opportunities. One of these zones will give you the opportunity always because we are inside the high liquidity. Okay, second one also got, you got 3,000 profit. Definitely you feel scared. You are thinking that I am losing all my money. That's not the case. Always we have to take chances inside the high liquidity zone because that is a money giving area. See how the third one holded the prices and pushed very fast. Within how much time? See, when we got the trade at 10 o'clock, 15 minutes candle we got and reached the target at 11 o'clock, 30 minutes. In 1 hour, 15 minutes. In 1 hour, 15 minutes, we completed the trade with a profit 27,337 profit. Whatever the losses, you recovered everything. Again, after recovering, still you got 22,000 rupees profit. That kind of mindset you have to build. You have to control your emotions. Previously also we have seen such kind of stocks, not two times, one time the stopped out and second zone gave you the profit within the high liquidity. Such kind of trades we have seen in the past. But this time it little, what to say, this is a more complicated trade. The reason is two zones are failed. When two zones are failed, obviously your emotions will dominate. The moment emotions dominate, you lose control of yourself. Your mind will be disturbed. The opportunity you are getting, you will leave that opportunity because you run away from the market and you will hide somewhere. Never do that. If at all we get the loss, how much loss we get? Let us assume third one is also failed. Maybe another 3,000 rupees loss we got. 3 plus 3, 6,000, 7,000, close to 8,000 rupees maybe you would have got lost today. Fine, all these days you are getting every day 8,000 rupees profit, 10,000 rupees profit, 7,000 rupees profit. So many successful trades you got all these days. If one day if you lose, there is nothing wrong. What I am saying, in case even if the third one is also failed, that condition I am telling, but that didn't happen. There are higher chances the third zone will be executed because there is a strong fall from here earlier, the rejection. So the order flow is very strong. Second thing is, by the time this first supply zone and the second supply zone is violated, definitely the demand would have been weakened. Our supply will definitely dominate. See, because supply is dominated, see how strong prices came down. These are all important lessons. These are all a kind of psychology related lesson also. By seeing these examples, we should change our psychology. That means we have to change our mindset. The moment your mindset changes, automatically your psychology also changes. Your preparation to accept the losses is very, very important. Once you prepared, and you won't get fear about these losses. Always positivity should be there. Even if I lost something, okay, fine, no problem, I will accept. That kind of mindset should be there. Then only you will get success in the market. When you are getting profits, good profits, but when you get losses, small losses, and instead of looking into the good profits, I mean big profits, and if you disturb your mind for small losses you are getting, how can we trade? You have to think in the reverse way. When I get profits, I get big profits. When I get losses, only small losses. I don't mind to accept those losses. When you have such kind of mindset in a daring way, you will accept these trades. Even 2 zones or even 3 zones fail also, you will accept. Even one day you get losses, complete losses, still you will accept. Because such kind of losses in high liquidity zones happens in a rare way only. But actually today it is a successful trade. Even though 2 zones are violated inside the high liquidity zone. Because overall it is a successful, because overall it has given 22,000 profit, which is 8 point ROI, return on the investment, as per cost of one futures lot. So that's why this example is a very, very important example. Such kind of situations your mind should accept. Then always if you tune your mind in such a way to accept all these kind of things, you will be a successful trader. A successful trader should have the mind to accept the small losses. Losses are small. In demand and supply zone, that is the beauty of this concept. The time when it gives you the profits, it gives you big profits. But the time when you get losses, they are very minimal losses. Because you are fine-tuning the zone in such a way, you will not get a loss not more than 2% on your investment. See, many people in stock market, they say 50% of my amount I lost. 75% of my capital I lost. That is what they will tell. But here, how much maximum we are losing? 2%. Maximum. Beyond that, you don't plan your trade. Because the maximum acceptable loss as per demand and supply zone, our theory is only 2%. You cannot plan your trade. That's it. That way you never lose your money in a huge way. It never happens in demand and supply zone. So this is about the analysis of our high liquidity zones generated in our yesterday's report. Hope this information is useful to you. Definitely the Tata Power stock is a very good learning for you. Let us all meet again in our next video. Thank you.